Last thing. Okay. We made it. Not really, because there's some other shit on the end of this. But know what low hanging fruit is and target that. Now, what does that mean? You probably hear multiple times, low hanging fruit, low hanging objectives and targets. If you're short, okay, what's the closest short term low? If you're entering on like a 5-minute chart, where's the nearest 15-minute low? Where's the hourly low? That's going to be the closest one if the market just keeps dropping. How far away is that? Now let's talk about this, because this is a question I saw on Twitter, where on Forex I have a rule, like I like 30 pips as a Judah swing or less. Generally, it's usually around 20 pips or so in London. If you're going to create the high of the day or low of the day, it's going to be a protraction, market protraction, where it goes the opposite direction you think the market's going to go for that particular day. It's usually 30 pips or less. And if it goes beyond 30 pips it can go to 40. But once it goes over 40, chances are it's probably absolutely not going to be where I think it's going to go. And I have to flip and change my outlook and then look for something else. Maybe not then in the same session, maybe later in the day or something like that, in like the New York session. And the question came up, like, if you're saying that in terms of pips for Forex, what would be the equivalent in index futures? And I don't really have a format like that, because currencies and the algorithm that runs on those interbank levels, that's something very specific. And it's a little bit more difficult for me to nail down a specific number of handles. So the way we strip that down is I just simply look at the 5-minute and 15-minute highs, and wherever the buy side above that is, I'm looking for it to at least reach there if I'm bearish. Or if it has, say, taken out relative equal highs or a single high on a 5 or 15-minute chart, and we're now dropping already, and it's beginning the morning session 8:30, or it's crossing over to 9:30, then I'm going to look for a fair value gap. If there's a fair value gap, then I know that the stop run already took place before the opening in New York. So all I'm going to do is look for a fair value gap, and then there it is. It started its move early. But if I take that type of trade, regardless of which one I'm using for that given day, they're never going to be the same. You won't see both those instances. It can't be. Either the relative equal highs if you're bearish, or the singular 15 or 5-minute high that has buy side above it if you're bearish. We are always anticipating that type of scenario where it runs up, knocks out that, scoops up that buy side to pair with shorts, and short is the smart money. They're going to look for what? A low. And the low hanging fruit in that example would be the nearest 5-minute or 15-minute low. Now, if you happen to have a 15-minute or 5-minute low that's like maybe 5 handles or 6 handles below, I'm not going to consider that. I'm looking for something that has at least 10 handles or more before that's my first objective. Like that's me, that's my personal, that's not my son's model. My son's model's, if he gets 5 handles, he's done. I'm a little bit more diverse, and I can look for a little bit more from the market than just simply that, clearly. So I'm looking for a low-hanging fruit objective would be 10 handles below where I got in at. So I'm measuring, okay, where my entry is. I'm already looking for where I'm going to try to get in at anyway. But if I secure the entry and I'm short, and everything I'm saying here is the reverse for going long. So just listen to the logic, write it out on a piece of paper, and then reverse everything directionally, and you'll have the same thing without me saying it the other way. But if you're looking for low-hanging fruit objectives, you can do your entire career with just that. Where your entry is, and if you get 10 handles below your entry, that's your low-hanging fruit. Boom, done. Now, if you're going to use what I taught as my son Caleb's model, I made that public. It's out there. I think it's in my 2022 mentorship. It's one of those videos later in the series or whatever. Then obviously you use that model, and that's that low-hanging fruit. You have a static 5 handles, 20 ticks, and you're done. That's it. You don't care what the rest of the day is going to be. And you start with that. And you start with low-hanging fruit objectives like that, and it's static. You're not trying to build a pyramid. You're not trying to turn day trades into position trades. Oh, this is going to be a one shot, one kill. I'm going to hold it for a week. No. The path to consistency is doing things over and over and over again that are consistently resulting in yielding positive results. And the easiest way to build confidence in what you're doing is finding comfort and trust in knowing that enough is enough. 10 handles. 10 handles in the E-mini S&P. It's $500 per contract. So I don't know where you're from, but I don't mind if I got $500 a day. $500 it's pretty good. I average a little bit more than that per day in ad revenue on YouTube. It's nice. It's a nice little kitty of money. But something happens when you get in there and you push a button, and because if it starts taking off real quick, you start thinking, oh, it might go down to that other thing that's way down here. Because what happens if there's a 50 handle day? What happens if it isn't? And you didn't take your profit and it reverses. That's the perspective you're supposed to have. You got to get paid when it gives you the opportunity to get paid. That's why you're here. You're not here for trophies. You're not here for fucking clout. Okay, you're here to make money. That's it. You're not here for friends. You're not here for relationships. You're not here for any kind of attention. You're here to just find some money. That's it. And consistently find an approach that gives you the opportunity to bank that. And you have to do this in your demo account for months to get used to doing that. And over time, how much time? Could take years for some of you, and maybe less for others. But for a rule of thumb, an approach that can be, in my opinion, replicated by the majority of you, not every one of you. Some of you are just never going to be able to do this, and that's the reality of it. Doesn't mean I'm a failure. Doesn't mean I'm a fraud. It doesn't mean my concepts don't work. It just simply means that you can't do it. And there should be no shame in that. If you ever get to the point where you come to the conclusion that you can't, then okay, no problem. Don't torture yourself anymore. I've had relationships and friends with people that over the last 30 years, they're not here anymore. They ended themselves. Not because they traded my concepts and they failed, because they did their own thing and they lost. And they lost big and they ended themselves. And I also have friends that did very little in terms of damage to themselves monetarily, and they killed themselves for nothing. Nothing. 50 grand? Your whole life is 50 grand? Every one of my vehicles that are paid for, and I'm not leasing, by the way. The titles, there's no stamps or a lien against any of them. Vinny. All of my vehicles cost more than $50,000. And my friend ended himself. $50,000 gone. He's no here. He's not here anymore. Bunch of sleeping pills, and he's resting in peace, I guess. That's how bad it can be if you can't wrestle this stuff beforehand. And you would have never expected that from him. He seemed happy. He seemed chipper all the time. Growing up, we were, the typical. But this kind of stuff, it broke him. And he didn't give any sign outwardly. Left a note saying, I lost everything. I can't do it. That sucks. Because you can't say anything to him anymore. You can't encourage him. You can't float him alone to say, hey, look, I'll fund you to get you back. And there's a lot of you that listen to me. And I don't know where you're at in your life. I don't know what you've done, or what kind of harm you can have to yourself. But I try to do everything I can try to do everything I can to keep these types of things from occurring again. And one of the fears I have is, say I do meet an untimely end, okay? Lord calls me home and that's his business and I'm ready when he wants to do it. But if my kids don't know how to do this like I want them to know it, I would not want them to feel that kind of pressure. I wouldn't want them to have that level of pressure on them that they feel like it's too much, it's overwhelming. So growing up, I pushed a lot for them to want to do what I do, but I didn't push so hard that they would feel like they have to do that. So that's why I drove them into working. That way, it wasn't me twisting their arm like a dad saying, go to my alma mater, go to my college and try to live vicariously through my kids. I am dying to live vicariously through my kids as a trader. I want to see them doing well and me grow older, watching them do, wild exploits and conquering things and taking down huge windfall victories and things. I want to see that. Not just in one kid. I want all my children to do that. Now, think about this. If you looked at what Larry Williams did and you studied his statements and such, which I did for years as a 20-some-year-old, I didn't have the access to seeing his statements. I didn't see them really until I was in my early 30s. And I don't know if they were available prior to that, but when I was in my early 30s, that's the first time I sat down. I've literally walked through every single one of his trades. And I was like, okay, well, I mean, clearly he's being honest. He's talking about how he's not a good trader. He used the benefit of maximized money management. And when his winners were winning, they were crazy, crazy payouts. And when his losses were happening, it was a big loss, but he was okay with taking that kind of loss because he knew his system, his approach was meant to capture big range days. And if he was going to trade a day when he thought a big range day was going to come, whether it be an up day or down day, he knew that if he got stopped out before, the day before, the bigger day would come and it would eat up that loss because it would be many times less than a full daily range would be. So with all that said, and without making it even more boring than it already is, I got to thinking like, okay, so how can I do this multiple ways where I can get to 11,000%? If this idea of everything I've mapped out resonates with you, I want you to sit down in your charts and think about what happens if you can get 6 handles a day. That's easy. Do 3 in the morning, 3 in the afternoon. You don't even have to have a full pool. What does that mean? Get in your entry and go to your full terminus target. 3 handles is shit. It's nothing. Like that's nothing. That's nothing. Like I could literally almost close my eyes and throw a fucking dart at a wall and put stickers all over the wall and have yes, buy, yes, sell. And whatever I hit on it, I can still get 3 handles out of that just by static price action alone. It sounds unbelievable, but it really is that easy. 3 handles is nothing. It's just static price action alone. You can get that. Now, if you know when it's likely to have the order flow in one direction, aiming for a particular high or low intraday, and you're going in, you're trying to get 3 handles in the morning, 3 handles in the afternoon, you have a recipe that you consistently aim just for that. You're not trying to get the full range. You're not trying to get 10 handles. All you gotta do is simply do that and let money management do the heavy lifting. If you average 11% a week, which I know some of you are like, what the fuck? 11%? Like, come on, Michael, come on. 11%? That's a lot. Actually, it's not. If you're in, number one, if you're competing and you have a system that has lots of setups, I have lots of setups. I have a repertoire and an arsenal that is absolutely unmatched. I have shit that nobody's ever seen before. I'm going to share some of that next year. But you only need a small little piece every single day. And here's what fucks up everybody. They all want to rush to the high end of that leaderboard and stay there and taunt everybody. They want to get to a safe high ground and they all want to get there real quick. That's the built-in advantage. You got to play the long game. The long game is taking small little pieces, even on one contract, and let it build up each time. Each time, build it up. And when you get your 3, you stop. Wait till the next session. Get your 3, stop. Close the fucking shit down. Don't trade anymore. Everybody else is going to be pushing. They're going to be buying and selling the same day because they think their fucking system does amazing things, and they end up fucking drawing down. Everybody does that. Everyone loses their ass that way. Don't be like them. Know what you're looking for, aim for it, hit it, walk.